Good morning, traders. It is Friday, the 4th of September 2015, 8 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. To keep the news very brief. For those of you who looked at the overnight session, probably saw a flush on the open of the Asian markets. Apparently, Japan's market on the drift down of the U.S. markets yesterday. The Japanese markets opened in a stop zone, and they saw an immediate flush in their market, triggering stops, and that flush translated to other markets. There was no news driving that, as far as I can tell from three news sources. Nikkei is down 2.25%. German factory orders missed heavily, causing a rise in the German treasuries overnight. And then at 7:30, we got unemployment came in at 5.1% versus 5.2% estimated, which was better. This is the lowest unemployment rate since April 2008. But the change of non-farm payrolls came in at 173,000 versus 217,000 expected. So it missed by quite a bit. An interesting trade. The expectation with that sizable miss was for it to flush down, but instead it popped up, then it flushed down, then it popped up again, as the market read that as a cause for the Fed to hold off on interest rates. That changed very quickly when Fed's lacquer at about 7:40 a.m., 10 minutes after the open, or after the release, basically came out that saying that the August jobs report was good, does not alter environment for monetary policy. Fed's lacquer still speaking and can say more, and based on that, we got a drop here in the last 20 minutes or so. Looking ahead at today's calendar, the only thing we have left here is the Baker Hughes rig count at noon Central, 1 Eastern, and then ECB Speaker Nowotny on a panel on jobs growth, expected to speak at 9. If you're trading the euro pair, euro against whatever pair, then you may want to keep that in mind. That's it for the topics as far as news. Let's look at the market itself. As always, I'm going to start off with what we expected to happen yesterday versus what did happen. Resetting these charts here. So yesterday's plan, the primary hypothesis was very simple. Expected the market to open somewhere in a gap, and the expectation was if it holds the 51 level, which is right here somewhere where this pink line is, if it holds the 51 level, then the expectation is for it to push to 68, 69 to close the point of control and gap from the 31st. And that's exactly what it did. The hypo 2 was if it drops below the 51 level and then holds it on a retest, then it's likely to target 1930. And then we had several stops on the way. We had the prior day's close, and we had this neckline here at about 37.38. So overall, yesterday's hypo 1 was right on target. It did push to 68, pulls back, finally gets our target at 69, and then it pushes through to 73.50 where it finds sellers. You can see a strong taper in the profile as prices pushed higher. There was no interest from buyers, and then all you're left with is sellers, and that's when we got this big rotation down, 9-point rotation down here. So the expectation is for a continuation lower, which gives us another approximately 9 points. You expect another rotation down, and it got us back to the 48 quarter on the dot, the prior day's high. on this green line that you see here. From there, we bounce back up to the opening swing high, and then we chop around. If you missed yesterday's webinar, AAQ webinar at noon Central, we were actually right here when the webinar happened, and we talked through a trade with one of the people asking a question. His name is Steve, and you can see I go through the logic of why we expected this to be taken out and for the gap fill to be next. And that's what we got. And then from there it was pretty choppy. Point of control moved down. You could see the point of control moving down from here down to down lower, but still outside of the prior day's range. So overall, higher high, higher low, with value moving up from pink line to pink line from 1930 to 1951. 51 being that former microcomposite LVN, or the over underline. So coming into yesterday's close shows us that we went neutral. Remember, neutral is defined as the first hour's high, the first hour's low. Those are the yellow lines. These are drawn in for the first hour's high, first hour's low. That's the initial balance. If one side's taken out and the market extends the range, then that's a normal variation day. However, if both sides get taken out, then we get what's called a neutral day. And then if the market closes outside of the IB, close to the extreme of the range, which are closed right here, we have a neutral extreme. So what we have is between the day before and yesterday, so let's zoom out here a little bit. Here's the IB of Wednesday. There's the IB low of Wednesday, and you can see that the market broke lower, and then it broke higher, and it closed on the high. So we had a bullish neutral extreme on Wednesday on the close, expecting it to continue drifting higher overnight, and it did. And then what we did yesterday was we reversed that. We took the inverse of that. We pushed higher early, and then we ended up closing near the lows, so the expectation is for it to continue to drift lower, and boy did it drift lower. On that Japanese move, it immediately dropped to 1920 something. Let's see, 1928 right here. So you can see it opened dead as usual, and then the Japanese markets opened here at 7 p.m. Central and immediately flushed down to 1928. That's a 20-point move, by the way, 21 points from the last swing high, 21 points in two 15-minute bars. That's not a methodical trend there. So overall, the overnight session did extend on the neutral extreme as expected. It did extend the session down, and then it just basically chopped sideways. A fairly B-shaped profile, long liquidation. The expectation with us falling back into the range is 1930. So let's look at where that 1930 comes from. Once we break, so auction theory is, I hate that it's called auction theory because I see it working all the time, but the way the auction plays out is if we break into the prior day's range, then the next likely test is for value high, and then once that breaks, then we're looking for the point of control, and once that breaks, then we're looking for it to chop in the point of control, because this is an accepted price. This is the most accepted price. You can see how thick the volume is in this area. We expect it to chop around in the 1930 area and then eventually make its way back to the neckline, the next key LVN, which is 1925, and then ultimately once it breaks the key LVN, we expect it to pull back and move to the next high volume node right here. So that's 1922.75. Let's see how that translated with the overnight session using the day session levels. So here we pushed down into the 1930 on that flush. We bounce back up, and then we start to chop around in this 1930. There was a weird bounce here at 41.75. But overall, you could see that there's a bulk of volume that's occurring right where this profile was formed right here. You can see this volume kind of translates into this volume, and then the next level down is around 1920. 1920 right here. It stopped at 22, and then we got the non-farm payroll noise. And now the low has been put in at 1075. So the overall overnight profile is a neckline at 1920 again. 1920 again being a key area to watch. And then we have another high volume node at 1915, and we've just rallied back up. And if it starts to move, to continue, if it starts to hold this area here, then it's expected to go to 2750, and that's where we're expecting to open at 2750. If it opens at 2750, let's get to the conclusion of all of this. If it opens at 2750 right here, if it opens at 2750, then we are below yesterday's value, below yesterday's range, inside of the prior day's value. We're in balance. I expect it to be a very choppy open, very noisy open, and then compound that with the fact that we're likely to see traders leave early today because of the Labor Day weekend. This weekend, folks travel early usually on this day. I expect the day session range to be fairly muted. But if we do open in this 26, 27 area, I expect it to chop around, but I do expect some responsive buying back up into this 37 area, and that'll be hypo 1. Chop and responsive buying. If it fails to do so and it chops around like it is now, and then it starts to move lower, then you're likely to target 16 quarter and then the overnight low with a high probability as hypo 2. Okay, so my job this morning as a trader is to wait and see, and look at my trigger chart right here. Watch the delta. Watch what volume is coming in, and it's my job. My job is to look for who is the dominant force. Where does it open? Who's the dominant force? And if it opens in this 27, 26 area as expected, then it's likely to get attracted to the 1930. So I expect some responsive buying, and then it could possibly push to 37 this morning for a 10-point range early on. If it continues to be volatile, which I would love for this to continue to be volatile. I'd love for this to be a 25, 30-point day. Not likely, given that non-farm is behind us, and it was a fairly muted release until the lacquer comment. I expect it to go fairly dead pretty early. Not the best of days to stake a big chunk of your account. It really isn't. This is a type of day where you need to be aware of your emotions, but you need to be on point when it comes to managing your trades. I would not let things go against me too far. You shouldn't do that anyway. But again, it's a 3-day weekend. That's a lot of time to sit there and let it simmer, let a big losing day simmer. Remember, September brings volatility with it. September, October brings some of the most volatile months of the year. Historically, there's plenty of opportunity to make money and lose money in the coming months. So just take it easy today is my strongest advice, my best advice. Take it easy today. Wait for the market to show you which side is dominant. Look for structures. Make up your mind. Decide on your bias, and then look for a structure that supports your long or short, and then let the trade do its job rather than tampering with it or giving it too much room. I'll keep it this short. I wish you the best of luck. Happy Labor Day weekend to everybody. Wish you a wonderful Friday, and I'll catch you on Tuesday. Remember, the market is closing at 12 o'clock on Monday, 12 Central. The market will be trading without the support of the equities market, so it's expected to be a fairly quiet session. The rest of the world is open. So keep that in mind if you intend to trade on Monday. Make sure your account information and the emergency numbers to your clearing firm are handy because your broker is not likely to be in on Monday. Good luck.